All right, so you're a customer at a brokerage firm, an investment bank, and you're nervous and you're calling a lot. That typically happens when we're in the middle of a free fall, maybe less so right now, but who better to ask than the Edward Jones CEO Penny Pennington back with us. Penny, always good to have you. What are you hearing from your customers? What are they saying? I'm sure sometimes there's a lot of hand-holding and just sort of guiding people through it, but what have you been noticing?
Absolutely. Neil, great to be with you again. Well, what's going on right now is the market looking for certainty and our clients working with our financial advisors to ask questions about their financial plan to make sure that they are still on track to achieve their short and medium and long-term goals, like things that you've been talking about, purchasing their first home or maybe moving across the country to be closer to loved ones or closer to their grandkids, which is my life right now. Also thinking about those experiences, like going to Disney World and taking their kids and grandkids on and having those experiences. So on Monday, we would have had a lot of conversations with our clients to say, yes, you are still on track. And let's look for the opportunities. You know, the market helped a lot of investors rebalance their portfolios on Friday and Monday, and we'd rather our clients do that according to their schedule rather than the market's schedule. And so this was an opportunity during times of volatility to really take a step back, to focus on the medium and long term, to make sure that the portfolio is well balanced, and to look for those opportunities at the same time.
You know, no one has a crystal ball and can tell exactly where the markets go, but they don't necessarily follow the exact same pattern, but they usually have the same bumpy trajectory after a free fall. Nothing like, and I know a lot of people were trying to sort of conflate the last big financial meltdown with what was going on here. I always like to point out that at that time, we were losing hundreds of thousands of jobs every single month. This go round where we reacted to a report that showed 114,000 more jobs in the month. It was deemed disappointing, but it was not a collapse in employment. So what is your view and what do you tell your customers about where this economy is now, where these markets are now?
Yeah. One of our best financial advisors says a good plan is better than a bad prediction. And so I'm not going to make a prediction here. However, this economy is a strong economy. We're in this world of bad news is bad news and good news is bad news. Don't forget, just a few weeks ago, we saw an inflation report that was lower than what was expected. And that's what people were looking for. We're actually seeing consumer demand soften, which means inflation is coming down. We're seeing services inflation beginning to pull back. So all of that says that the economy is resolving toward a softer economy, a softer labor market, but the fundamentals are still very strong. And I think we should also not forget that the promise of AI and technology is going to enable our economy to be even more productive and innovative. I think there's great promise there. There's one other thing that I want to say about the volatility that we should be expecting right now, given inflation, interest rates, and a coming election. You know, it's very interesting that in election years, it is more likely that the market is going to be up and up more in an election year than in a non-election year. That's generally going to happen after the election occurs. Because there's certainty then. So what we say is don't play politics with your portfolio. Stay focused on your medium and long-term goals. Make sure you're looking for opportunities. If you've got questions, talk to your financial advisor about that. Those questions are real, and what's happening in the marketplace right now is affecting real investors and their plans. We're here to help.
And it depends on their age as well, right, Penny? I mean, obviously, the younger you are, you have more time to sort of adjust to this and sort things out. And longer term, the market is always, I think, 80% of the time is friendly to you. In other words, 80% of the time going up, 20% of the time going down. But that is over, you know, more than a century now. And then there are periods where you lock in to a series of sell-offs because some sectors got rich. You mentioned AI. a lot of the key AI plays are coming back, but many of them are already in and out of 15 to 20% corrections from their highs. Obviously, anything more than 20% puts it in a bear market. So the reason why I'm mentioning it is that even some of the promising investments are taking it on the chin. Now, again, it gets back to how you advise a younger investor versus an older investor. The older investor who might be looking at retirement pretty soon is looking at this and freaking out, right?
Typically, a younger investor, you said it, has more time, but that's kind of a rule of thumb. With each of the clients that we work with, each of the families that we're engaged with, we talk to them about their goals, their short, medium, and long-term goals. We also talk about their tolerance for risk, and that's an abstract phrase. What it really means is, how are you going to feel when we hit a bumpy point in the market? Are you going to want to retreat, or are you going to feel more comfortable continuing to engage even in a volatile market? That's a family by family.
But when you say engaged, Penny, in a volatile market, but when you say engaged in a volatile market, I didn't mean to jump on you, but does that mean engaged but in more conservative investments, dividend-paying stocks, utilities, that sort of thing? Maybe don't go to the big, sexy, fast market names. If it makes you lose sleep. How do you obviously you can't get inside every investor's head, but isn't that what's going on right now among a lot of investors? What do I have the stomach for?
Absolutely. You're absolutely right. Now, fundamentally, though, every investor needs to be well diversified according to their tolerance for risk and volatility. But you need in your portfolio something that you're always going to be a little bit mad at. Not everything in your portfolio should be making you supremely happy, because you never know when that sector is going to turn or when that asset class is going to shift. That's why diversification is so important, and why it's so important not to lose focus, not to panic at times like this. Just think, Neil, if investors had been out of the market the last 2 days because they got afraid on Friday and Monday, that would be a real shame. And this is where real good financial advice comes in, helping people take the emotion out of these decisions and remain focused on their goals.
I know you avoid investment advice or where the markets are going to go, and you're wise to stick to that, because even the brightest minds I know don't know. So I'd like to get your sense, having gone through a couple of other down cycles, what's a lesson we learn? Stick through it. Rejigger your portfolio a little bit if you're nervous about it. What?
It's a boring answer, Neil. It is the way it has always been. As an investor, focus on your goals. Get real clear about the possibility that you're looking for in your life. Work with a financial advisor to scenario plan against that. What might happen? What might happen if something shifts in the market? But what might happen if something shifts in my life? Have a couple of scenarios in mind. Make sure that you have a well-balanced portfolio according to your stomach for volatility, and then continue to stay engaged with your family and the goals that you're trying to achieve together, and your financial advisor to help you stay on track. It's as simple and as boring as that.
No, it's very good advice. Penny, what I try to tell my family when my sons start calling asking, how are investments, Dad? I always like to reframe that and say, well, your mother's investments and mine are doing quite fine. And I like to reposition that, because there's no gimme that they're getting anything. So I think this tough love approach can be very beneficial in a market downdraft. Penny, terrific job. Great catching up with you, and some very sage advice on just stepping back and looking at the big picture. We always appreciate that.